Greetings, Dr. Jeffrey Scott. This is my weekend market update for October 22nd, 2023. I've been absent this week. Been very busy traveling. Today was the F1 race in Austin. We sponsor a car, and to put it mildly, I've been busy. I titled the session Oversold at Support, Bounce, or Breakdown. I favor breakdown, but I'm nimble and I'll play whatever we get. Again, October 22nd, and my email address is hgsidoc@gmail.com. As always, these sessions are for educational purposes only. Any recommendation should be taken in the spirit of education and not investment advice. I am a doctor, not a broker. I am independent. I am not affiliated with any software vendor or third party. And trading involves risk. You alone are solely responsible for any investment decisions that you make. Major markets tell the story. In yellow, I highlight the major indices. Notice down for the week, down for the day. Same thing here on the Russell. The other thing is we've now lapped the 52-week low. So it was much more important to me to track that when looking at the low. These numbers have already come off the low because the low was October 13th. But you can see, except for the Russell, which is now flat since October 20th, a week after the low, the other indices led by the Q and the NASDAQ are still doing well. However, these were both up over 40% not too long ago. If you look at Friday, you can see weakness throughout. And if you look at the week, led down by the NASDAQ 3.2%, the NASDAQ 100 2.9, and then the S&P minus 2.4 and 2.2 on the Russell. Just a bad week. On the S&P 500 sectors, all of them were down on Friday, and on the week, the only things up were energy and staples. Here is the Q Edge tool, so I'll point out a couple of things. If you look at over 1 or 2 days, all the sectors were down. Most of the industry groups were down. You can see 88, 96, and most of the stocks were down. This was a rough time if you're long in the market still. If you look out over a month, 91% of sectors down, 91% of industry groups are down, and 82% of stocks are down. Certainly not a time to be a hero in this market, and one where at the minimum, caution is warranted. I also want to point out the 23.4% of stocks in the S&P 1500 are now below the midline, below the lower of their Bollinger Bands. So we're starting to get a little bit oversold, but as we know, markets can get even more oversold before they're done. Here is the Nick Drendel tool, and I just want to point out that the only thing that was up on an industry group on Friday was transports. Gold, biotech were relatively flat, and leading to the downside was clean energy, solar, and the software group, which you look here over 50 days and over 20 days, has held up relatively well, rolled over as well. Everything is below their 200 except for the Qs, but clearly a weak market. Rates continue to go higher. Here's the 10-year, here's the 30. I don't think they'll be working my wealth chart, so I'll just call it out now. We are at multi-year highs on rates, and this is certainly pressuring the market. Do we have a recession in our near future? Probably, but when? Notice that the yield curve is heading up towards the midline, especially on the 10-2. Now that could happen because the long-term rates are going to rise and start to overtake the short term, and that might be if the pros are starting to think that this market is going to see higher rates, or it could be happening because the short term is getting lower. I think it's the former. I think the market's recognizing that we are going to have higher rates for longer, and the long end is starting to go up. That's not a good thing. Now notice the recessions occur when the rates cross the midline or after, which is usually when the Fed has started cutting rates. If we look at the credit risk, it's turned up a bit, but it's still much lower than it was in 2020, 2008, 2001 too. But that's something to watch. And then mitigating it perhaps has been this diffusion index, but it almost looks like it turned back down. This is a measurement of activity. So I think recession's more likely this week. Well, I think it's been likely anyways, but I think the evidence is getting stronger. But when? Short-term oversold, stocks above the 200, stocks above the 400 have all racketed down. But look at the 2121, the 13-week new high, new low is at a place where you expect a bounce. Now, you can get a complicated pattern like we saw back here in 2019 and in 2020 where it just bounces up and down, and that might be what we're creating here. Just because that's there does not mean new highs. It just means you'd expect somewhat of a, say, an exhaustion bounce to occur right here. Current buckets, here's your stocks below the Bollinger Band on the S&P 1500. That is significant, but as I've shown you on slides before, you can get 90% of the stocks below. So it would suggest a bounce is coming, just like the 2121. It doesn't mean that we're resolving this. Okay. Continuing on, 81% of the stocks are below the midline of their Bollinger Bands. Again, bearish. No evidence of a Hindenburg. Well, we're well off the highs. You wouldn't expect to see them. To me, the nerve-wracking thing is look at the NASDAQ, over 10% new lows for the year and almost 10% on the NYSE Common. So these markets are very sold off here, but oversold markets can and often do get more oversold. Now, this report just confuses the daylights out of me. There are a couple of pockets that must have been earnings related where there was some outperformance. But for the most part, the markets were down. In fact, you can look here, regardless of relative strength rank, and except for just the two highest earnings ranks, stocks were down. If you look at this list of different groups, which include, well, frankly, when I started the week, I still had some positions. And if I held them, I was down 3.9. That's not to say I would have held them. You look at the IBD 50, for example, and you're going to see it was down 5.62. There's no strength in this market. Very weak market. Now, this week we've got news, PMI, GDP, jobless claims. We got the PCE, among other things. And we have massive earnings, including a lot of favorites out there, whether it's the old standard Coca-Cola, Microsoft, Alphabet, Visa, Texas Instruments, Boeing, Meta, IBM, some of the software stocks, ServiceNow, Align, Amazon, Intel, Ford, UPS, Altria, and then on Friday we still have some energy and other names. It is a judgment call to hold your stocks over earnings. It's bad judgment to not know when your earnings date is scheduled. For me, this will be an easy earnings week because I don't have very many positions to worry about. Now, I will judiciously look at the markets, and I'm not saying that when the week ends I won't have any positions, but going into this weekend I really cleaned out my portfolio of whatever was left. Why? These are two charts I show you intermittently. The one on the left shows the Fed rates, and what I want to show you is the rates typically do not, we typically do not see market bottoms, these blue lines, until the rates start to fall. Have our rates started falling here? Enough said. The other thing is, if you look at the typical bear market moves, could be 30% in a secular bull, but it can be almost double that in a secular bear. If we go into a larger recession, one might expect the markets to sell off worse. No surprise there, but they could be significantly worse. So we fell last week in racing October gains and now down for the month. I think, and so does everybody else I listen to, that the ingredients are in place for a significant crash here, but that doesn't mean it will happen. Small caps have wiped out nearly all the gains for the post-COVID, while the Qs and the spiders remain up on the year. I am mostly in cash. As I mentioned, we might see a bounce, but we'll need significant healing for you to put much money into this market. Nibbling on contra ETFs might make sense, especially when we have a bit of a bounce. You think about what else is going on here. We've got issues about the Speaker of the House, still not filled. We've got Ukraine, we've got Israel, we've got a budget deadline looming in a month. So there's a lot of things that could make people nervous about this market. On to the charts. For those that like to look at a lot of charts of things to buy, you may have to go somewhere else tonight. Here is a look at the week on the 5-minute charts. Here would be the 13th, this will be the 16th. So Monday we started with nice, a little gap up in the morning. In fact, we peaked on Tuesday around 12:30. From then on, you could see a steady sell-off the rest of the week. So a weak market, and you got to play the market you have, not the one you want to have. And you can look here on the S&P, or here the spiders breaking out of this wedge, triangle, whatever you want to call it, down to the 420 level, a bounce up to the 50, and we're almost back to the 420. This 420 had been resistance on the way up, and it's been support on the way down. A break of that will certainly get me nervous. Notice the little red line here is the 200, which we knifed through. So a weekday on Friday down over 1% on pretty good volume, and you're starting to see the MACD cross to the downside. So nothing there to like. If I look at the Qs, they have broken through the 50. They are still above the 200. Pretty negative day, closing at the low at 149. The Dow broke through the 50, the 200, the anchored VWAP to the highs, and is now moving towards this white line here, which, if I remember correctly, is going to take us down to the bottom of a trading range that we were in for quite some time, starting in the October of 2022 range. So what are my targets? We're almost there on the S&P 500. If it does not hold 420, the next one is 413. And then below that, God only knows. The Qs, I'm looking at the 200 and the anchored VWAP. I'm looking at the recent lows here on the diamonds, and then all the way down here. The Russell shows you that things don't have to stop falling. It broke through the January lows, it's broken through the anchored VWAP, and it's now looking at some of the October lows are now in play, right over here. So nothing is pretty on the indices. You can see the VIX, and this is Friday, just going off high. On the week, the VIX had a big move. The VIX was up 12.37% on the week. And the dollar is sort of behaving here, just going sideways, but it's going sideways at a very high level, way above the line here that I hoped would hold, which held in the past. If we look at commodities, interestingly, despite the dollar holding up, gold and silver have had a bit of a run, and I think that's purely fear-based because of what's going on with Israel. Oil continues to trade near its recent highs. Gas is weak. We already talked about interest rates. Weekly market signals, the new sell on the Qs closing below the 30-period WMA with the red bondo. So now all the major indices are in a sell sign, which is a time that I don't look to go long, especially except in nibbling special situations, more likely to go into shorts or contra ETFs. If I look at the S&P sectors hourly, I'm surprised to see communications have held up, but I think they were flat on the week. Energy also held up, and then the other strength has really been in staples, utilities, and healthcare. Now, everything was down, so this is all relative strength compared to the rest of the market, and those are defensive, so not a big surprise. If I go into the scanners, and let's start with the heat map of the S&P 500. I hope you like red. You can see there's some strength in healthcare, Intuitive Surgical, J&J, Merck, Abbott, and then you got financials, Goldman Sachs, Morgan, and then AT&T. Over here, I purposely left this on. This is a contra ETF, These are tough because they're not investments, they're just trading instruments. They can have rapid moves, but they can also drop rapidly as well if you're long. A break above the 200 here might give this an interesting signal. This is SPXS. It will go up when the S&P 500 goes down. Now, if I look at the entire market and I look for everything that's got dots, you could see, and this is only looking for dots. It's not looking for any other pattern. There are very few stocks that have 4s and 3s. Autoliv, don't know much about it. I think it's a competitor of Carvana, but sideways move. Must have had earnings. It did. Well, actually, earnings are coming. I don't know if earnings are out yet because we're not seeing anything. My guess is they came out. It had a gap, volume, breakout momentum. Look at the relative strength in OBV, but it's still, to me, just going sideways. I don't know anything about CIR. Still don't want to know anything. EEFT, Euronet was one that showed up on my scans as well. It's red because it closed below it open, but was still up over 8%, almost 9%, with lots of volume in a weak market. And this was in response to earnings, although they're not in here yet. So I guess the earnings updates have not come through. Knight Swift, transportation, an EMS signal. These are all ugly. They're all in downtrends. They're all below major moving averages. It's all hard for me to get behind, but this one had a bit of a move. CRNX, pharmaceuticals, don't know the story here. It looks like it went up on news, rate buy, 33. Nice move up here, sideways move, might be getting ready to go away if this market stays healthy, but I don't think the market's healthy. And GoodRx showed up on a number of my scans, but you can see this is a beaten down stock. Now, the good news is it's giving you a little bit of base. It's got a higher low here on volume, breakout momentum, relative strength and OBV look good, but you've got the 50 and 200 overhead, so I doubt this thing's going to have a big move. Jazz is a biotech play, ran up to the 200 and reversed. I don't like it. And then we get to the two dots, and I'll just count out a couple of them. Abbott, persistent turtle, pays a dividend, but I don't like buying things below the 200. I don't like them buying below the 50, and I don't like them when the 50 is below the 200. Now, if I look at pullbacks and uptrends and try and clean this mess up a little bit, you're going to see there just isn't a whole lot here. Gold has looked interesting. AU is a gold play. It's broken out. Still going to have to get above the 200. When I think of BVN, I think of more than just gold, a miner. Tried to run on Friday and pull back, still finished with a nice session, up 1.80%. Really, the only thing that looks interesting to me, frankly, are some of the contra ETFs. And let's just look at them as a watch list right here. So dog goes up when the diamonds go down. All right, so here's a stock that's breaking out after a recent pullback on good volume. Relative strength and OBV look good. We don't want to see this look good because it means the Dow is weak. SARK goes up when ARKK is weak. This one's had a fresh breakout here. This one looked really good right here with breakout and momentum. This one looks strong. All right, SDS and SPXS will go up when the spider is weak. Breakout above this 200 will make this interesting. Now, I want you to look at what you see here on the right. What you see on the right is that these things are down a lot off of their highs, and that they're all in downtrends. But these are not investments. These are trading instruments that you would play if you think the market's going to go the wrong way. SQQQ will go up when the Qs go down, and you could see it trying to form a bit of a move here. SOXS will go up if and when semiconductors decide to go down. Looks a lot like the Qs. And then TZA will go up. Wow, this one's had a nice run, hasn't it? Broken out and running right here. Breakout momentum from a squeeze, relative strength and OBV look good. This goes up when small caps are weak. Now, just to prove a point, let's look at high relative strength stocks. That are some scans I do in MarketSmith looking at the traditional IBD relative strength leaders. And you're going to see that even they have few actionable stocks. So let's bring this over here. And you're going to see just a couple. Up, you're going to see none. That tells me a lot. Pullbacks and uptrends are not working right now. Just to show you some of the stocks that I found on my buy watch list, these are not stocks I'm going to buy. They're stocks I'm going to watch and then give me a sense of what's going on. CCJ, which is a uranium play, has pulled back here, stopped at the 50 and the 17. Will I buy it here? No, but I'll be looking for a move. There's your ALV. ANF has been a leading retailer. It's giving you a pullback into the 17. This has been good times to buy here and here. Don't buy it because it's pulling back. Buy it when it breaks away. Daktronics is a small electronics manufacturer, has pulled into the 50. Will I buy it here? No, but it's given me a little bit of a flag. Let's see if it breaks out here. LPG, we've looked at many a times. It's pulled back into the 17, but I would not buy it until it starts to move. And then I've got the QUIDs, the STSs, the SPXU, which is another S&P 500 contra ETF that will go up when the index goes down. And there you have it. This is a short video because I just don't see a whole lot to do. Yes, you could be looking at individual shorts. Personally, I prefer the ETFs. And yes, I put together a list of things I could short. Accenture had a big run up, failed here at the 17. It's got to get below the 200 before I would do that. Biogen IDEC has sliced through its indexes, its moving averages. It's way off the 200. Many of these are too far gone. Costco, I'd love to see it pull back into that 50 and fail, so I'll be watching it. Some of the software stocks. Hubble is electrical, I believe, has just broke through the 200. It's probably gone too much. Hubs, bull failed at the 17, has broken down the 200. I look for a retracement to that 200 and a better chance to short. Is it time to get out of Lilly? It's been a great leader. It probably goes higher, but when you look at it, it's pulled into the moving averages, something to watch. Microsoft, the bellwethers, pulled into the 50. It'll probably bounce here. Another reason why I think the market might bounce short term. But a break below there will be interesting. So these are stocks that I'm watching, looking for them to give me evidence it's time for a fresh short. And here's the spider. If it breaks below 420, I'll be in several of those SPX and others that will go up when the S&P drops. I think we're going lower. I hope you have an awesome week in the market. Be careful. Don't forget earnings Lollapalooza.